Good morning, everybody. My name is Hussein. I'm the marketing manager here at Sahouri. Want to thank you all for coming. For those of you who could not attend the episode number 1 that we did a couple weeks ago, we will resend the recap of episode 1 along with the recap of this episode as soon as we can via email. So look out for that email in your inbox. Also like to thank our friends at General Counsel once again for their partnership. We had some really good feedback on episode 1 and hope to deliver more value in episodes 2 and 3 and beyond. I know we've talked about doing more of these collaborations and maybe do an in-person event later in the summer when things are a little bit more relaxed and safe and comfortable for everybody. Before we get started, I do want to let everyone know that we are recording this session. Just in case you have your cameras on, just wanted to let you know that we will be recording just so that we can share the recap with those who could not attend. And we are also taking questions in the chat box down below on your toolbar. We want this to be as much of a discussion as possible, so we will be addressing some relevant questions within the discussion. Any questions that we can't get to within the discussion, we'll address at the very end, the last Q&A slide. And if we cannot address everything at the end, then we will also address those via email as we did in episode 1. And with that, we'll move on to the speaker slide and introduce our speakers.
Hey, good morning, everybody. My name's Louis Rhodes. I lead the government contracts practice group here at General Counsel. I've been here back in private practice in the firm here for about 16 months. Before that, I spent about 7 years as an in-house counsel, so I understand the pain on the company side when it comes to throwing together proposals and pricing things and all the headaches that come with the operations side. I work primarily in small businesses, so I had the opportunity to wear 2 or 3 hats, which, while fun, is exhausting. So I came back so I could just be a lawyer for a while. I'm here, and I've got my colleague here also with us, Evan St. John, who's one of our senior corporate attorneys here. Evan, go ahead and run through your 30-second bio.
Yeah, for sure. Thanks, Louis. My name is Evan St. John. I've been with General Counsel PC since the beginning of this year, and before that was with a sort of similarly sized firm just a couple miles away, so I've been in the area for a while. I primarily focus on sort of general corporate work, smaller M&A transactions, setting up new entities, and employment, independent contractor agreements, those types of things. So I can work really well in coordination with Louis to make sure that our GovCon clients can sort of get everything that they need in one shop.
Yeah, and Evan's being modest. He's one of the best around at reviewing and interpreting some contract clauses. I used to think I was pretty good at it until Evan put me to shame on a couple of things. So when I have difficult issues on a contract, I ask him. And also with us to talk about and educate us all on different insurance products is Alan Hudson from Sahouri.
What's up, everybody? Good morning. Thank you, Louis. It's always a pleasure to participate with you guys. I had a lot of fun last session. A lot of people say that 15 years and about 50 pounds ago, I was the Doogie Howser of insurance. For those of you who aren't familiar with Doogie Howser, the 18-year-old doctor, probably before some people's time, which is sad to think, really sad to think. But so I was born into the business, and a lot like contract law and insurance policies are one gigantic contract, right? It's a 2-party agreement. Everything is got to be black and white. Insurance companies, as we all know, are in the business of paying claims they don't intend to pay. And so they have to get very granular and very strict in terms of their intention. And this is a fun one because I think, insurance contracts, insurance policies have to be worded properly. The certificates of insurance evidencing coverage has to be worded properly to match these contracts. And I guess without further ado, let's get this ball rolling. Louis,
All right.
yeah. Start us off.
Sure. Okay. We pivoted to this topic based off of some feedback and some questions we got in our last session. And as we discussed what we were going to talk about in this session, we thought this was a really important topic. I've been in the government contracts legal field for about 15 years. And I follow all the different firms and groups out there, and I don't see a lot of conversation on this topic. And we're going to focus on the prime sub relationship and specifically like the risks and how to mitigate those risks between the two. All right, government contracts is very unique when it comes to.
I don't know. I'm seeing if it's nice outside or not.
So,
if I can just ask everybody to turn off their mics, please. Thank you. Sorry, Louis.
No worries. It happens. So, government contracts, the prime sub relationship is very unique in GovCon, right? It's government contracting alone is very unique. It's heavily regulated industry. There's a lot of laws that apply. There's a lot of regulations. We've all heard the FAR. We also know the DFARs and every agency has their own rules on top of it. And, there's a lot of the flow downs on the FAR, like a lot of provisions that get thrown into an appendix in the back of your contract that people don't always pay close attention to that then, those are laws and regulations governing your work, right? You're working a lot of times wearing the badge of your prime contractor. No one knows actually what company you actually work for, and you're sitting around delivering directly to the customer. Like I said, I think in government contracting, that's a pretty unique environment. And, you get a lot of responsibility in your performance and you answer to the government in some things, but you don't have privity of contract with the government. So if the government makes decisions that kind of jerk you around or could put you at risk, you don't have a lot of pushback other than working up through your prime, and your prime isn't always necessarily motivated to do things on your behalf. So because of a lot of this, there's a lot of unique risks that address a government contractor, and we're going to dive into we're going to focus on kind of the liability and the insurance issues on how we can adjust and assuage some of that liability. And there's a lot of people get contracts and they take their subcontract from their prime and they glance through it. And, if they don't have an in-house lawyer, they'll go ahead and just make sure the payment terms are correct and go ahead and sign a contract. And that's a really bad idea. And at the risk of going too much into war stories, I can scare everyone with a real life scenario that I had to come in and help clean up. So the last in-house job I had before I came here, I worked for a government contractor, and they had a contract. When I walked in the door, the company was upside down on the contract by $1.2 million. The contract was negotiated by the CEO of the company I joined in conjunction with the CEO of the prime contractor, and no one paid very close attention to some terms, such as it was a firm fixed price contract, but our employees were authorized to work overtime, and then all the high risk, high overtime employees were put on to the subcontractor instead of the prime. And $1.2 million later over a span of 10 months, that's a lot of money to lose in 10 months, no matter how big of a company you are. We had to start cleaning that up. I was able to, with some creative lawyering, I was able to get us a out of the contract and get a resolution where we got a settlement of $500,000, but the company still lost $700,000. And that was in 12 months of performance, they lost $700,000. So if you're a company out there that thinks you can easily absorb a $700,000 hit, go ahead and sign your contracts without a close diligent review. But I don't know many companies that can afford to lose that kind of money. So you really want to have people who read contracts for a living to take a look at your contract. And that's not even the worst. That's a real life scenario that I had to deal with personally. We're all, I'm sure Alan and Evan both can be replete with stories of issues out there where there was a liability issue, someone got hurt, there wasn't the right kind of indemnification language, or you had a limitation of liability clause in your contract that didn't allow you to sue your prime, and you ended up leaving hundreds of thousands or more dollars on the table. So this is a topic that people should pay very close attention to. And when we get into these contract clauses that are going to make non-lawyers' eyes kind of glaze over, you want to know a little bit to know what to look for. And if you see these types of language in your contract, you want to come to us or some other legal counsel to take a look at your contract and help you out. Can we get to the next slide, please? So, and while we talk about insurance and liabilities, Alan, let's talk about how we can transfer some of those risks.
So actually what we're seeing is a trend of the primes transferring an unfair amount of risk to their subs. And so that's what I kind of want to briefly talk about. It's sort of like a heads up on a list of things to look out for in these contracts and these indemnification agreements. So before we get into the actual FAR requirements, right, or the standard insurance requirements and indemnity, I do want to talk about sort of what we're seeing in general that is being passed through to subcontractors unfairly. Errors and omissions insurance, the requirements for E&O, especially from primes to sub, don't take into consideration the size or the scope of the project. And so what we're seeing a lot of is subs or really just contractors coming to us with these insurance requirements that were passed on by the prime, written very much boilerplate with $10 million E&O requirements. And that might make sense if we're talking about, Fortune 500 to Fortune 5,000 sort of risk transfer. But when we're talking about, small business, subcontractors bidding on sort of that relationship or that opportunity to work on some larger project, a $10 million E&O policy will literally end up costing more than most of the contracts awarded. I mean, depending on the nature of the contract, whether or not it requires the network and privacy liability extension on the E&O, which I won't get into too much detail with yet, you're talking about upwards of $10,000 per million minimum premium. So going back to your kind of horror story, we had a situation where someone came in with the requirements and needed us to get $10 million of E&O coverage for a tech contract. And because it required the network and privacy and the cybersecurity, they were suddenly faced with the prospect of paying an additional $100,000 to acquire the coverage to basically be compliant with the contract. The contract itself was a $300,000 contract. So you can see how they got underwater very quickly. Now, we were able to ultimately negotiate with the prime more reasonable limits. And it wasn't even a negotiation. It was like, oh yeah, sorry, here, let me amend that. But I have also been in situations where they weren't budging. And when you're talking about taking third-party data under your care, custody, or control, that is a real hot topic right now. We've got our national oil pipeline basically being hijacked and ransomed for Bitcoin. Imagine being the security provider, the software technology provider for whatever system that was running on.
I hope they have good liability E&O insurance.
They're going to need a lot of it, right? And really ransom coverage. I mean, the technological ransom. Anyway,
Alan, you hit something on the head, and I want to flag that for everyone again before you go on. The prime contractor in your horror story was willing to play ball, but since this was after the contract was signed, that prime contractor had every right to come to the sub and be like, too bad, so sad, this is a requirement. And you now as a small business are faced with either losing your shirts breaching your contract or just trying to terminate it without destroying your relationship. So, and again, back to my point a few minutes ago, you really need to look closely at what a lot of people call legal boilerplate is not really boilerplate, and it can be really harmful.
Yeah. Yeah. And the other scenario, the other value add or the benefit of really talking to not only legal counsel, but involving the insurance broker before the bid is released is, insurance can in many ways be a large portion of expense. And there's a very limited market for certain types of coverage, especially if you have any sort of overseas exposure. Workers' comp, the equivalent of that on the federal level is Defense Base Act coverage, right, for overseas. And there are only like 3 markets right now that will dip their toe in half of the countries around this world. And we're talking about pre-negotiated rates of anywhere between $20 and $30 per 100 in payroll. And the point there is you're bidding with one arm behind your back if you don't have those costs itemized and figured out before releasing your terms. So very important.
And that's a really good point, right? A lot of us, I've helped price proposals, and you're trying to throw stuff together and you're off there doing it at the last minute. And I think a lot of people assume that, oh, my insurance for contract A costs this, so that's what it's going to cost me for contract B. So I'm just going to factor that in as almost a plug number in my price calculations. And what I'm hearing you say is that's a really bad idea.
Yeah.
Absolutely. We're talking a penny, the difference of a penny in the rate can be hundreds of thousands of dollars. Right?
Well, you have to allow
that can win you the contract as easily as it can lose you the contract. Sorry to interrupt. Yeah.
I was saying, often you'll see clients who assume they have insurance with one, in one project, and either don't look at the contract until 2 days before something's due, or don't read it at all, and are surprised that an insurance company is not willing to immediately issue something without reviewing anything. So you need to make sure you give yourself time to secure those items before you go forward as well.
There's no worse feeling than the situation you just proposed. It's like when you don't have, it's like, we're out of time. What do we do? I can't do anything. And there's no more helpless feeling in the world in that situation, for sure.
Well, I think the worst feeling would be to have a liability accident and think you have insurance and then realize you don't.
Touche. That might be a little better. That might be a little, you might have one up this there.
Yeah, because I think we've seen that one happen too. And then they probably call you trying to figure out, how can I get insurance a week ago?
And it's contract specific. A lot of this coverage, if the contract number is not stated on the deck page, it's not covered, kind of speaking to what Evan was mentioning. So, it's not general liability is general liability, but a lot of these other coverages are contracts.
I'm using this my personal device because I am on a conference webinar on my phone about.
All right, thank you for the muting. Now, when you're Alan, on your slide here, you talk about pass-through costs on the insurance responsibility. You wanna explore that? I think that's an important topic to dive into here a little bit.
Yeah, no, I like every one of our presentations. It's like where can we find the time? And yeah, there's a lot on here, and so really these bullet points are intended to sort of address some issues that you need to think about, and also probably better utilized by reaching out to us via email. We're pretty good about responding. I think we did a great job, by the way, Hussein and Sydney, thank you. But yeah, so pass-through costs, what we are seeing right now is a tremendous amount of effort on the prime to cut costs, right? And or pass through those costs. And whether it's workers' compensation, what we're seeing a lot now is environmental impairment being a major requirement. So we're seeing pollution liability being required. I think one of the questions from last session was, why do I need auto liability, right? Well, you're paying for auto liability because your prime needs it. And if they don't require all of their subs to have it, their insurance is higher, right? So as part of their contract agreement or their agreements with their insurers, right, they've got to assure their carriers that all of their subs have it. And that part makes sense. That logic makes sense. But what's happening now is they're able to transfer all of that, and the risk is 100% that of the sub. Then all they need to do at that point is close the gap by requiring their subs provide them with those endorsements listing them as additional insureds. Because if they're not directly exposed, then they can ride on top of the sub's insurance, right, and bring their premiums down to nothing. Well, that is just sort of what we're seeing. I mean, a lot of that is naturally occurring, whether it's general liability or workers' comp, but there are new requirements being added daily, whether that's pollution, cyber liability, right? All of these new coverages. Even I guarantee you, we're 6 months to a year from now from some sort of requirement or position with regards to communicable disease. And that's going to be another cost that's going to also be expensed or passed through.
But just because it's logical for the prime to pass that down to the sub doesn't mean it's reasonable to do so either. So there is the opportunity to negotiate with the prime to try and level things out. Obviously, it depends on how much bargaining power you have and how much you want the contract. But if you get a professional in there early, it's possible that you can shift some of that back to them as well.
Absolutely.
Yeah, and that's a great point, Evan. And these are the types of conversations, like when we get into the teaming agreement phase out there with the contractors, right? Hey, I'm all excited. I got a teaming agreement with Lockheed Martin, and I'm going to be like, this is my first time playing in the big leagues. You want to clear up a lot of these issues in your TA and understand what your requirements are going to be, other than I have to provide you 6 FTEs. Well, what other requirements are you going to have other than those people? What kind of insurance and what kind of other things? And the more stuff you can shape out during your teaming agreement phase, the easier it is to kind of go to your insurance broker and other people and get your good and accurate costs, so you're not spitballing this stuff and risking making a big mistake. But while we're talking on contracts, can we get the next slide, please? So we're gonna talk about a couple of specific clauses, and I'm gonna let Evan, the contracts expert, really dive into these. So there's 2 or 3 clauses that we as lawyers will always read probably 5 or 6 times when we review a contract. Indemnification clauses are one of them, and they're generally written in a way that the average non-lawyer who hasn't read a couple hundred of these things can not understand them. So Evan, why don't you tell us kind of what we're looking at here and what we need to pay attention when we see an indemnification clause?
Yeah, so there's sort of 2 or 3 main types of provisions in a contract that will shift liability. The 2 big ones are an indemnification clause, and sometimes either separate or integrated to it, a limitation of liability clause. And they are extremely hard to read a lot of the time, even for lawyers. And unfortunately, that means that a lot of business folks either don't read them or assume that their legal representation has done a good enough job. In both cases, that can not be the case, unfortunately. But when you're looking at one of these, what you want to do is sort of figure out what is being indemnified, who is being indemnified, and then what are the procedures to make sure that that happens. And those are all sort of separate issues you need to look at. The most basic type, it would just be the 2 parties, or sometimes it can just be unilateral with one party indemnifying the other, which, if I haven't said before, indemnification is covering another party for its losses that it experiences in the course of a contract. And a lot of these sort of oppressive one-sided contracts from very powerful parties, they'll basically just say, whatever I do, you're responsible for. And we'll see sort of an example of a bad version of that in a couple slides. Looking at this one, just to sort of give you an idea of what a lawyer would look for, it identifies the party by saying vendor, indemnify, defend, and hold harmless. Well, indemnify is what I said before. Defend means that they'll have a right to step in the shoes of the party that they're helping out to lead that legal case. oftentimes you'll see associated with that sort of limitations on that. So, you know, if a party doesn't want the indemnifier to be able to lead the entire legal case because they have their own interests, you know, they may write in, you know, but I get to either have my own lawyers present or I get to approve any settlements that might happen. So that's something to keep in mind as you go forward. Another thing to look at is the types of damage, of situations that would be indemnified. Here we have, for example, actual, alleged, or contributory patent or copyright infringement, and then a couple other things. You know, I would immediately look at that alleged right there because, you know, I may or may not want to indemnify someone for entirely frivolous claims that really have nothing to do with me, but just happen to be about copyright infringement. If I were on the other side, I certainly would, and would insist that that be in here. So these are the types of provisions that lawyers go back and forth on a lot because while they discuss very remote possibilities, the potential damages from those sort of outcomes can be very high. And that's what results in a lot of the war stories that Lewis and Alan will, I'm sure, tell us more about as well. The other things you will look for, the level of wrongness of an action. So in Romanet 2 here, it says by grossly negligent action of or intentional misconduct by. Those are each different legal standards to determine sort of the intentionality of the actions that were taken. And it's really important.
Evan, I want to stress this point a little bit because I see a lot of indemnification clauses, I'm sure you do, where they refer to just negligent action. And, describe a little bit kind of the legal difference of adding that grossly in there, or like what's negligence versus gross negligence when I talk about, making a mistake.
Yeah, so they are related, but not the same. And it's just a matter of degree. So negligent would be basically something that if a reasonably prudent person were in that position with their sort of types of training that are expected, they wouldn't have done something. If it's grossly negligent, you know, that is a step above where it's not a minor mistake. It is a significant thing that basically no one in that profession in the right mind would have done, which is a much higher standard to prove. And so, you know, if you see that you might be on the hook for your negligence, you know, good people can be negligent. I guess good people can be grossly negligent too, but prudent people won't be. I think prudent people can even occasionally be negligent. So it's important to understand the terms you're looking at and understand the ramifications of those terms. Lewis, do you have anything to add to that particular?
Yeah, no, I think that's a good point. And like I said, I've fought over the grossly versus non-grossly negligent many, many times, as I'm sure you have. And as we're paying a lot of attention on this, I want to put this in non-legal terms. When you indemnify your prime, if you are accused, don't even necessarily, depending on the language, don't even actually necessarily have to cause the damage. But if you're accused of doing something wrong that causes your prime contractor damage, you then have to pay all the legal fees to defend that accusation. And if you lose or you have a settlement, you're the one who has to pay the cost.
Yeah.
So this can literally, if you're a small business, this kind of mistake can absolutely bankrupt your company. And Alan, while we're talking about the cost of some of these indemnifications.
Well, I was just going to say, do you think your insurance carrier might want to know about the contracts you're signing for any particular reason?
Just a bit, yeah. I think it would be good to rope them in early and often to make sure that they don't have any comments as well, because oftentimes they're going to be the ones that are absorbing the damage from these things.
Right. They'll be indemnifying you if they agreed to it or they were aware of it prior to you executing it, right?
Or if you talk yourself into a corner and sign one of these that's really bad, they may not want to be that person.
Right. And they may not have to be based on the insurance provisions, right? Mm-hmm. So, intentional acts is never covered, right? And you see here, you add to the company or its representatives when acting at the direction of the company. How do we define whether or not that action of the employee was at the direction or was sort of a bad actor, right? It gets very complicated. But sorry, I was just chiming in on that whole, like, the cost of What was the question, Louis? The cost of?
Well, what I was going to ask you, and you just actually addressed it, is where's the risk where your insurance company doesn't step in and cover this? And I think you just kind of hit the nail on the head. And for folks out there, if we're terrifying you over your indemnification clauses, we're doing our job right, because this is one of those, and I always tell my clients, lawyers are paid to think worst case scenarios. And this is the worst case scenario where if a mistake happens and your language in your contract is bad, it's literally time to close shop and go find something else to do, because it'll bankrupt your company. If I cannot stress enough, like when you have indemnification language and other things in your contract, you really, really need to spend a little bit of money on a lawyer to make sure it's written correctly. The odds of it happening are, what's probability, right? Probability equals the risk is the probability of something happening versus the damage that happens with it. The probability may be low, but the damage is catastrophic. So if you're that unlucky 0.1% where this kicks in, it's a very, very, very bad thing. Evan, any other? I know I kind of jumped in here. Any other?
Yeah, I think Alan had sort of alluded to what I was mentioning before, where you need to look at who is covered as well. If it identifies just the parties themselves, that's the most limited sense. Other times they'll rope in people that are more and more attenuated to the actual business being done. So it could say, officers, employees, agents, representatives, sometimes affiliates, sometimes subsidiaries. And sometimes those things are reasonable, but sometimes they're not. And, if you are doing a fairly limited task and knowing that other people, those people aren't going to be participating, it's likely that you shouldn't have to cover what some officer said to someone when they are, barely related to the work that's going on. So it's important to have an attorney look over those and ensure you're not agreeing to something that's way overbroad.
Yeah, and your prime contractors are generally going to ask for overbroad coverage. So this is definitely a place where you need some artful lawyering applied. Can we get the next slide, please?
So the second,
going hand in hand with the indemnification, as Evan just said, is limitation of liability. Well-drafted, you want a limitation of liability clause in your contract, right, Evan?
almost always, depending on if you know that the risk lies disproportionately with the other party, you may not want one because you will want them to absorb any cost that comes your way, and you think the likelihood that you'll have to do the same is low. But in most cases, you do. And the reason for that is, in business, having unpredictability is dangerous. And that's why we are here as lawyers, is to make sure that you can predict outcomes. And then we have folks like Alan who, they exist merely to take horrible events and assess whether they're likely and terrible and to do something about that. But when you're looking at a limitation of liability clause, they can be extremely useful, so that you know what you might potentially be on the hook for, even if something goes bad. If you're looking at one of, so for example, this provision on the left here, oftentimes they'll have carve-outs for particular types of things that will not be subject to a limitation of liability. And I personally know of several occasions where clients have thought that, there was a limitation of liability of $25,000. We're fine, we can pay that. But it's for a data breach, which is accepted from the provision, and suddenly they have to pay $10 million because, 100,000 people's social security numbers just went out over their servers, and they're responsible for fixing that issue. So we can't reiterate enough. Small likelihood, high damage, events can happen and do happen, and you need to prepare for those ahead of time.
Yeah, and Evan will dive into these a little bit, and I want you to kind of crosswalk these two. But just for everyone's knowledge out there, these are actual limitation of liability clauses that came out of contracts that our clients asked us to review. Yeah. So this is the one on the left is from a very large, very well-known, publicly traded government contractor, and it's the standard clause in their services agreement that they, if they're hiring you as a service provider vice a subcontractor. I imagine the subcontract language is very similar. So I've seen a lot of these. They all look, the big primes tend to do it right and tend to write ones like that. The one on the left, I think is fairly good. The one on the right, I think, Evan's going to raise a lot of red flags on that one.
I'll actually start with that one, I think.
Yeah, and I tell you, I usually find the clauses that are a little bit riskier. We're talking about primes jamming things down your throat. The large business primes generally have very reasonable contracts. It's the more larger small businesses to mid-sized businesses that maybe haven't hired, they can't afford a bunch of contract professionals, and they cobble together agreements. And I think that's where you're more likely to see the clause on the right.
Yeah. Big clients will have well-drafted but slightly unfair things. Smaller businesses where it's two business people dealing with one another will often have ones that just sort of give insane outcomes that you either didn't intend or just you don't know what you're agreeing to. So starting with the provision on the right, it says company agrees that contractor will not be liable to company or any third party for damages arising from contractor's performance of the services. So if you think about what that means, the contractor is going to be doing things for you, and yet you are responsible for making sure that contractor is doing things correctly. That's not how that should work. Just on a surface level, you're hiring a professional because you believe that they can diligently complete their work and they have knowledge that you don't have. So if you're agreeing to be responsible for their mistakes, you can end up in some very bad places. So immediately I would not like this provision at all. But there's a number of other issues with it as well.
From an insurance perspective, you're literally paying for their coverage unknowingly.
Yes.
Basically paying for their mistakes.
And essentially incentivizing their bad behavior, because
Yep.
if they know they're not on the hook, they're less likely to act in conformity with your agreement and laws and other issues that could come up. So it's not only that it could damage you, it's that it also increases the probability of you being damaged because they don't care as much anymore. Going forward, it also says, arising from contractor's performance of services, and then in parentheses, including but not limited to failure to perform in a timely manner. Well, what does failure to perform in a timely manner mean? If they took your money that was paid as a deposit and then they just never show up again and never do any work, they could argue, well, I just haven't done it yet. So it's just a failure to perform in a timely manner. That's clearly not what the party, or shouldn't be what the parties intend, but it's a loophole you can drive a truck through. And so you want to be sure to clearly, carve out exceptions in a logical way that, can't be argued against easily if it were to come to litigation or if you need to enforce these provisions. See.
Well, the other thing, Evan, I want to point out here is it looks like the indemnification clause is buried in one bullet in this example versus that whole page indemnification clause we saw on the last slide.
Yeah. Well, and that's, a layperson often looks at contracts and thinks, fewer words are better, but oftentimes the reason that legal contracts, develop into these 80 or 100-page behemoths is through learned experience and the need to carefully articulate what's being covered. So even if it makes them sort of inscrutable, a lot of times it's really useful to have that additional language and those additional bullet points to address more types of situations more granularly. And then
I think the big takeaway here, and I don't want to cut you off, but I want to make sure we get the rest of our slides, and we got a couple questions popped in. The big thing here, though, I think for everyone, foot stomp moment, if you had to stress something, is if you see a limitation, liability, and indemnification clause that's in a couple, that's maybe in 150 words, it's probably really dangerous, and you probably shouldn't sign that contract.
or at least have someone look at it first.
Yeah. So again, these are the kind of things that you hope never come into play, but if they do come into play, you really want to make sure you have well-drafted language.
Yeah.
And our last clause we're going to look at, if we can jump to the next page, we're going to these are some of the third big clause that ties into this is going to be insurance clauses. So your contract's going to have, as Evan just went through, the limitation of liability, your indemnification, And then you're going to have a insurance clause, especially in your subcontract. The FAR requires contractors to carry a certain amount of insurance, and the primes are just going to cut and copy out of the FAR and push it down to their subs. So, Alan, go ahead and walk us through this clause and kind of what it means, what it's asking for, and where maybe are they asking for too much or too little insurance.
Yeah. So, and in fact, like this is a good standard, right? So I think FAR's come a long way, or at least maybe we've diverged quite a bit, because very rarely have I seen a sub come to me with insurance requirements that are not in some form or another either expanded well beyond what's reasonable boundaries of this drafted requirement. But what we're seeing is, general liability, 1 million, 2 million, right? That is the standard off the shelf limits for a GL policy. Again, many private contracts, many contractual requirements have much broader, higher expectations. Usually you'll see an umbrella requirement of anywhere from 5 to 10 million. So reasonable, and really, if we are in a situation where we have subs, this is a great sort of baseline. Automobile liability, one of the questions from last episode or series was, why do we need auto liability if we don't use our automobiles for this contract? And really, our liability for auto extends beyond just our use, but anyone who we hire or operates a vehicle on our behalf, right? We can be drawn into it. And that's what the hired and non-owned, or in this case, they say non-owned and hired vehicles used in the performance of the service. Hired and non-owned auto coverage does not take into consideration any actual owned automobile usage. And so if you don't have owned autos, the cost to acquire that coverage is maybe $250 a year. So it's really just sort of a just in case coverage. Obviously, workers' comp, I like that they have an employer's liability requirement of $1 million. You got to be careful. A lot of insureds, a lot of buyers of insurance will take the minimum required, $100,000 per employee, or $300,000 any one incident. That is not going to meet those minimum requirements of this contract. And then professional liability, if it is a professional service. We can talk about what the definition of a professional service is, but essentially it is you being paid essentially for your advice or your expertise, right? So insurance agents, attorneys, engineers, architects, but also any software or technology provider is going to have an E&O exposure. And that's going to be your biggest cost. Right, that is going to be 300% more than your general auto and most likely workers' comp combined. Again, this is I want to save time because I know we have questions, but this is a good standard insurance clause. If we had time, I would show you what a bad one looks like, and one where the pass-through is excessive, right, and unaffordable even for most contracts. So. Yeah, let's keep it moving since we only have 10 minutes and make sure we get to these questions.
Well, one quick thing, if we can actually, before we hit this question, and Alan, we're going to talk subrogation on our first question, so start putting your subrogation hat on. Can I go back to the limitation of liability clause real quick? And I want to flag out here at the very bottom on the standard one on the left, as you look at the screen, it refers to, it ties back to the insurance article, Evan. And now, is this telling me that my limitation of liability won't apply if my insurance policy is more than the liability limits and they can sue in the amount of my insurance? Or are they saying if my insurance is capped at a certain dollar figure and the lawsuit's more than that, they can still, I could be on the hook for more than my insurance? What's that language actually saying to me here?
Let's see. Where's that provision? I'm sorry, at the beginning of the left one?
On the left, the second bolt down there, where it talks about the amount in excess. They're limiting it to the amount you're paid over 12 months, but the obligation will not be limited by insurance costs.
Oh yeah, so obviously you need to look at Article 5 and see what that says. But the idea there is if you have insurance that is going to cover you anyway, then the limit of liability cap will not apply to them because they know that there's basically someone else on the hook who will pay the full amount, which is not what the insurance company probably wants to
insurance
see.
companies love that, don't they?
Yeah, and since you signed a waiver of subrogation, it's the carrier wouldn't really be able to try and then recover for what they've paid. That's a big one.
Well, you brought up subrogation. We got a really good question here, and it's talking about how the government requirements tie into subrogation. But before we answer that specifically, can you describe for those not aware of what subrogation means?
It's an important point, right? So, you have to think of it from a conceptual perspective. Like, let's say you're the insurance company, and if I get into a car accident, right? If somebody rear ends me, or in the simplest form, like I have to go to the hospital and I have bills, my carrier, right, is going to step in and pay for my damaged vehicle. Right, there's going to be some med pay coverage potentially, but then they are going to have the right, after they've paid for my totaled vehicle, to subrogate, right, or go after the person that rear-ended me to recover for their loss or payment, right? And so the carrier is given the right to subrogate in your insurance contract. In other words, part of your insuring agreement states that if a carrier ends up paying you for damages caused by a third party, in exchange for that consideration, in exchange for that payment, you transfer the right that you would normally have to go after that responsible party. You transfer that right to them. So now they are essentially they have ownership of your accounts receivables, right, for that liability.
Yeah, no, that's a good. Basically you're handing them your right to sue the person who hit you. That's a great example.
Yeah.
Now the question was in the government requirements, how does that play into subrogation? My experience here is, the insurance policy and then the prime sub relationship are both commercial contracts. And even though you're underneath a government contract, it's if the government demands money from the prime, or the government or some other party caused by you, then the prime can come after you and vice versa. I don't, unless the ultimate offender was the government, where you then are under the Tort Claims Act. I don't think there's much difference that I've seen, and Evan and Alan, I don't know if you've seen, where a subrogation would be different because it's a government contract situation.
Yeah, it might be less likely, but it definitely I don't believe it changes materially from what I can see.
Yeah, I said I think I think the issue is if the ultimate party who caused the damage is the government, vice a third party, then you're under Tort Claims Act, and you have to figure out whether or not you can sue the government and what your claim would be. So like I said, I think subrogation is something that a lot of people hear the word and they don't realize what it is. So Alan, I definitely appreciate your clarification there. The other question we got here related to this was, and this is a good one for you guys in the insurance market. It was asked about, the Deepwater Horizon. After that, did you guys see any changes to the insurance market after a sizable accident like of that type?
Well, so I'm looking at the chat question. Is this a different question?
This one was sent just to me, so that's why I have it and I'm reading. It was just I think the general question is, have insurance provisions changed in the government space since that accident? And
Or just in response to large global events as they happen.
Right. Well, yeah. So insurance is actually impacting everything behind the scenes. really, there, for example, there was a large contract, a D-Light contract to deploy thousands of linguists overseas to basically, bunker up with Marine Corps and Army units in hotter third world countries to build rapport with a lot of these local tribes people. And I'm talking about everywhere from Yemen, Somalia. I can't even talk about too much of it, but suffice to say, the insurance carriers of the world that would actually write the federal workers' comp coverage to protect those people all said no. They didn't say, we're going to charge you $1 trillion. They said, no, we're not going to provide no one's going to provide coverage. Similarly, this, outbreak, we're getting into hypotheticals, but suffice to say, it's not so much that these large multi-billion-dollar situations affect the insurance industry. It's the insurance industry sort of affects how government is going to approach these things in the future. It is a very, very, very good question, but it's profound. The answer is profound and such that, too big to fail, if you will.
Yeah. No, I would struggle with answering that directly. But I did, you do see, and you alluded to this earlier, I think when you talked about how there's going to be some insurance requirements over communicable diseases and pandemics, and if I have to close my office or my business, there's going to be a need for insurance related to the event we all just lived through over the last year. And I think you're going to see the market change. I know on a contract side, right, Evan, now when we get our force majeure clauses, we see lots of language about pandemics and related quarantines, which, 15 months ago, you probably didn't see in very many contracts, and now they're in all of them.
Yeah.
So I think we do real events do very quickly find their way into insurance policies, coverage types, and contracts all the way around.
Yeah, when it comes to third-party liability, there is very little in terms of a limitation that can be applied other than, like the canal, Suez Canal, the shutdown was costing, that was a liability to that shipping company. And there were underwriters and carriers around the world sharing what was ultimately, I think, a $12.5 billion an hour loss of global financial income. I got a much easier one. How about we knock that additional insured language out? That's a straightforward Q&A. I like that. Not that other question wasn't really fun.
That's not showing up in my chat.
Oh.
So why don't you go through the? Read that out for us, and we can.
Is it reasonable to request that the prime and government are named as an additional insured? Right, and that is. I get this question quite a lot because it sounds like by listing someone as an additional insured, you're conveying or you're actually providing coverage for them through your insurance. But it's a very clear and simple answer here. By providing additional insured endorsement to whoever is requiring it, all you're saying is that our policy, in the event that we, let's say the prime and the sub are both sued for the sub's actions or failures, our policy will pay to indemnify us and the prime and be the primary insurance policy. Does that make sense? So our liability policy kicks in first, but that's only in the situation that the prime and us, the sub, are both named in a suit for something that the sub allegedly did, right?
Well, let's cut to the chase on this one. How much more money is that going to cost me to list my prime as an additional insured?
Typically, it'll be free. If you have a broadening and a broadened named insured endorsement, which is like $50 a year, you don't even need to, we can print them in our office. We don't even need to go back to the carrier. So yeah, anywhere from $5 to $50 to do that. And that's again, because the carrier's not taking on, we're not assuming more liability. We're just essentially clarifying that if I screw up and you end up getting named in the suit, it makes sense that you would require my insurance to indemnify us first.
Right, and this comes up because every single subcontract you see out there with an insurance clause, right, Evan, it's going to ask for a certificate of insurance where you name the prime as a additional insured.
Additional insured is okay because we're just, again, we're only insuring or only providing them with coverage in the event that our mistakes or our actions cause them a loss.
Okay. And I had one last question that came in ahead of time, and then we're going to be running out of time, but I want to address this one. We got a question about FAR Clause 52-250 TAC 1.
Thank God.
All right. And how that shows up a lot. And well, I'll tell you, that's your friend if you're a contractor. And that shows up in contracts where I'm building nuclear bombs in somewhere where the government's going to hire me, and no insurance company in the world is going to insure me to do that work. So the government agrees to indemnify you as long as you're working within the scope of your contract. So if that's a FAR clause. If you can get it in your contract, you always want it in your contract, because that says as long as you're doing your work under the government's direction, you'll be covered and indemnified by the government. And at that, with that addressing that last question, Hussein, do you want to take us home here, or do I get to close us and wrap us up? I think you're on mute.
Just wanted to thank you all for your expertise and your time. I think we may have a couple more questions that we received on the registration forms that we'll probably share in the recap. We do have a part 3. It's going to be in another 2 weeks. Hope everybody can make it, but thank you all for coming out today. We will announce the topic for part 3 based off of maybe recommendations that we get from the audience. That's it. Really, have a great rest of your days, everybody. Great rest of the weekend, rest of the week, and then the weekend. I'm taking an early weekend to celebrate Eid, but yeah, thank you all for being here.
All right, thank you. Well, you have a happy Eid celebration. It was our pleasure, and I look forward to the next one.
Thank you, everyone, for coming.
Take care.
Bye, everybody.
Take care.